Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Mark Marex, Product Development Specialist with Nasdaq Index Research, to discuss relative strength, short and long-term moving averages, as well as year-to-date performance in FAAMG, taking the N out of there and replacing it with Microsoft. Mark, it's great to see you. And let's start with our first slide here, looking at relative strength.
Sure, great to see you too, Jill. Thought we'd do a bit of a technical check-in since last time we did this about a month ago. You can see here that we've got the NDX price levels plotted in the blue against this 14-day relative strength index of the same. And I think the key thing to take away from this is, in that red circle, where the index peaked at the very end of August at around 12,500, we were seeing RSI at about 80, which is extremely bullish. Very, very rare to see a reading that high. Basically anything, above 50 is considered bullish. Anything above 70 is considered extremely bullish. Then we had that pullback in early September. We had a couple bounces since then and a couple pullbacks. We're not back to setting new all-time highs on the NDX, unlike with the SPX. And part of that is the performance of the FAAMG, which we'll get to. But part of that is also just general sentiment around the index is just not as strong as it has been. You can see it's been oscillating in that 40 to 60 range, averaging at about 50 for several weeks now. That is a very, very neutral sentiment reading. Hard to see, whether in the short term this bodes for another jog up in the index to setting new all-time highs, or continuing to kind of bounce around back and forth and not going anywhere for the rest of the year.
All right, let's take a look at a couple time frames here, starting with short-term moving averages.
Sure. So, again, last time we talked about what was happening with that pullback in October. We kind of blew through both the 20-day and the 50-day moving averages. And then the question became, okay, where's the level of support that we're going to start to see for the index? At the time, I think we said around 11,000 looked like a good level of support. In terms of these short-term moving averages, we seem to have found support again in the short term at around like 11,500. That's kind of where both of these have averaged out in the last couple of weeks. And I think that's a good number to keep looking forward to as a downside barrier, at least.
All right. And I'm sorry, longer term. Yeah.
Yeah. If we look at the longer term moving averages, again, 100-day versus 200-day, you can see we bounced right off the 100-day, right at around 11,000 in mid to late October. Then we had, all of these catalysts, right? We had the election, which people, I think generally investors greeted with a lot of confidence that at least, from the perspective of tallying results and getting a clear outcome, it wasn't all that close. So they appreciated that certainty, and they also appreciated right after the election getting both Pfizer and Moderna vaccine news out, vaccines coming out likely before the end of the year. So those were very good catalysts for the broad market. The NDX has been underperforming a bit relative to the S&P 500, but still good enough to get back up to, almost 12,000. I think that 100-day, ending up at about 11,500 is going to continue to provide some pretty good support.
All right, and let's wrap up here and look at FAAMG performance. I noticed that you took out the Netflix and put Microsoft in there.
Yeah, and the funny thing about this is when you look at Tesla and how big Tesla's gotten, it's closing in on Facebook. And in terms of contribution to overall index return year to date, I think it's number 2 behind Apple. So I think personally we're going to change this to FAAMG pretty shortly. To fit Tesla in there. But, before we do that, FAAMG is kind of where people settled on for a while. You can see most of these names except Google have not really gone anywhere since late August when we had the peak in the NDX. Google, of course, had a pretty stellar earnings release in October. That drove the stock to, all-time highs at the time. And you can see the rest of these have sort of been kind of bouncing around, but generally a little bit negative since that late summer surge. And that really tells the story, right? The rest of the index has a lot of still pockets of outperformance, especially from the likes of Tesla. But, you know, some of the bigger names that obviously drove us out of those lows in March, having a hard time finding justification for new highs, especially with, you know, the pandemic kind of seeing a light at the end of the tunnel now, and maybe some of those work from home themes, you know, starting to cool off as we get into year end.
Mark, thanks so much for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.